We have a gap and go on Tesla this morning on the monthly chart, also on the weekly chart, also on the daily chart. Now, this phenomenon is only occurring because it is the first trading week day in the month of July. So, why the gap and go to start the week? On the 3rd of July, which is typically a slow trading day, as we have 4th of July tomorrow. Well, this past weekend, Tesla made some headlines. This article is coming from CNBC. Tesla reported 466,000 deliveries for the second quarter, production of 479,000. All right, so Tesla deliveries, 466,140. This is key because analysts were expecting 445,924 deliveries. So they beat the analysts' expectations by roughly 5,000 deliveries. So the numbers beat analysts' expectations that indicate that deliveries rose 83% year over year for Tesla after Tesla beefed up their manufacturing capacity, in particular at their Austin, Texas facility. The second quarter of 2023 marked the 5th period in a row when Tesla reported a higher level of vehicles produced compared to deliveries. Now, remember back in the days, early 2010s, when Tesla was trying to ramp up, in particular the Model 3. And now we're talking roughly 500,000 deliveries in a quarter now. About 96% of the deliveries were the Model Y crossover and Model 3 entry level sedan. At an annual shareholder meeting in May, Musk also said Tesla will deliver its first Cybertruck pickup in 2023 and is developing a new kind of drive unit and other technology that would allow it to deliver a more affordable EV in the future. All right, so let's get into this quick video. This is coming from Bloomberg Technology, and it gets into
of maintaining
numbers look because they were past Wall Street estimates.
Yeah, they were, and Wall Street had some pretty healthy estimates itself. These were released Sunday morning in the US, just over 466,000 cars for the second quarter, and that was a beat of 18,000 vehicles and an 83% rise on the year as well. So a pretty strong set of sales numbers. Doesn't break out, of course, Tesla sales by model type, but it is known that the Model 3 and the Model Y accounting for the vast bulk of the sales here. There's other good news as well. Tesla's had a problem with its inventory buildup. First quarter it produced 18,000 more cars than it delivered. That's pulled back a little bit as well to 13,500. But in terms of the rest of the year, it's really going to have to pick up the pace to meet its target of 1.8 to 2 million cars. Been a good year. Shares have almost doubled year to date. Very encouraging numbers ahead of Tesla earnings. But a lot of analysts are predicting with competition picking up, might have to see some more discounting from Tesla in the months to come.
So, Paul, what are the chances of Tesla cutting prices further as competition gets tougher in the EV space?
Yeah, we have seen some sharp discounting already. The Model Y now just under 48,000 in the US. Previously, at the start of January, it was 66,000. And as I mentioned, some analysts now saying, well, we might see more price cuts. And this is to do with that tougher competitive environment, particularly in China. It was just last week Tesla announced another 4.5% price cut for one of its models there. BYD, the key competitor there, backed by Warren Buffett, build your dreams. You see more and more of them in the streets here around Sydney. So Tesla has got its work cut out for it in terms of maintaining its market position. Still number one in the US, but the rest of the world, not so much.
So earlier this year, Tesla, Elon Musk announced several price cuts, and that was the reason why we had this we'll call it a pullback, right? From a technical standpoint, that pullback also occurred right at the resistance area of this uptrend line, right? However, that pullback was short-lived as it did find buyers roughly at the 165. Didn't quite get to the daily buys level at 142 before price zoomed a lot higher. Now, in that video, I talked about margins. Again, Elon wasn't concerned about margins. He was concerned about demand for their vehicles, and that might also have contributed to the fifth consecutive record-breaking quarter. He recently tweeted, "Please advise people may be wary of margin loans. Tesla has always been a very high variability stock, often with no obvious rhyme or reason. We are confident about the long-term value creation, but cannot control the manic depressive nature of the stock market." So again, we do have a beautiful gap and go. This would have been a great opportunity to buy some calls at the open. Although I would imagine that those call options were selling at a very steep premium. Nevertheless, the price target still remains, short-term price target still remains $300. Why $300? Well, if we scroll to the monthly chart, we can see that was a shoulder in which was part of a head and shoulder that was formed from 2021 to late 2022. There's nothing really stopping price from moving higher, as you can see that on the daily chart. This is the target, this is the shoulder. Thanks for watching. Subscribe, please like the video.